Hello and happy Monday, everyone. Sorry, I couldn't join you guys in the currency call today because I have some urgent matters to tend to. Okay, so regardless, okay, I've actually pre-recorded this video on what I would like to share with you guys on the Jackson Hole Symposium. Okay, now for Traders Club members, okay, you guys probably already know that the Fed Chair Jerome Powell, he's quite inclined, I would say very inclined towards a QE tapering before the end of this year. Okay, now why is that the case? For the other members out there, let me just go through the statement with you guys. Okay, so this is the statement that Jerome Powell made on Friday. Okay, so we can actually go straight to the last part over here on monetary policy. So, okay, we have said that we would continue our asset purchases at the current pace until we see substantial further progress toward our maximum employment and price stability goals measured since last December. Okay, now this is Powell's view. Okay, my view is that the substantial further progress test has been met for inflation. Okay, that's good. Okay, there has also been clear progress towards maximum employment. All right. So as a result, during the recent July's meeting, okay, Jerome Powell, along with most of the other participants, felt that it could be appropriate to start reducing the pace of asset purchases this year. Okay, so overall, this is actually a very hawkish tone being sent out by the Fed chair, which is actually what the market wants to hear, right? I mean, okay, although we didn't really get any timeline, like during the prep video, okay, I actually mentioned that it is unlikely that Jerome Powell will be mentioning any dates, okay, perhaps like next month or 2 months down the road that the taper will start and things like that, okay. But nonetheless, at least, okay, right now we know that Jerome Powell is in sync, okay, he's in sync with the other committee members, okay, the more, I would say, hawkish ones, okay, that felt that a tapering this year is warranted, okay. So another point that I would like to make, or rather Powell actually made, is that the timing and pace of the coming reduction in asset purchases will not be intended to carry a direct signal regarding the timing of interest rate liftoff. Okay, so many people may actually feel that with this whole tapering to start, it is actually we may actually be seeing a sooner than expected hike in interest rates. No doubt, okay, from the, I think it was a couple of projection materials, a couple of quarters ago that 1 or 2 quarters ago that the Fed actually revised their projection materials positively. Okay, so many of them are actually expecting an earlier than before hike in interest rates. Okay, so despite that, Jerome Powell over here, he's actually trying to clarify that just because we are inclined to carrying out a early and a QE tapering this year and before end of this year, okay, does not mean that we are going to be expecting any high interest rate anytime soon. Okay, why is that the case? Because you see over here, we have said that we will continue to hold the target range for the federal funds rate, which is the interest rate, okay, at its current level until the economy reaches conditions consistent with maximum employment, okay, and inflation has reached 2% and is on track to moderately exceed 2% for the time, for some time, okay, moderately exceed 2% for some time. Now, as I've been mentioning again and again, that the jobs market in the US, okay, has been recovering very strongly, right? However, okay, as of the July's report, okay, July's figures, jobs figures, the US job market is still some 5.8 million jobs away from its pre-pandemic level. Okay, so if it's still quite a distance away from pre-pandemic level, it is definitely further away from the Fed's maximum employment mandate, right? Remember, the Fed has a dual mandate, right? One of them is maximum employment, the other one is price stability. Okay, so maximum employment is something that the Fed would want to see. Okay, it must be clear. Okay, so they must actually go past, okay, the pre-pandemic level before the Fed will actually be considering a hike in interest rates. Okay, so that's for employment. Now, for inflation, we have been seeing very strong inflations for the past few months. Okay, so apparently, the Fed would like to see this whole high inflation to be taking place across a longer time frame. Okay, before they are convinced that they have reached price stability, right? So over here, Jerome Powell actually said that time will tell whether we have reached 2% inflation on a sustainable basis. As of right now, okay, as of the recently released inflation report, annual inflation was around, I think, 4+ or 5%, okay, which is definitely way above, okay, way beyond the Fed's 2% target. Now, what Powell wants to see is, it to be more sustainable for a longer period of time. I don't know for how long, because of the new average inflation targeting policy that they have adopted last year. Well, pretty much exactly 1 year ago, when they actually announced it during the Jackson Hole Symposium that took place last year. Okay, so QE tapering, we can expect them to carry it out this year. Okay, interest rate, not so soon. All right, interest rate, not so soon. So these are the two main points, okay, that Powell actually sent out. Okay, now personally, if you ask me, okay, the next monetary policy meeting is on 23rd of September. Okay, now as Jerome Powell has mentioned many times, okay, when the Fed decides to do a QE tapering, they will actually give the public way advanced notice, okay, of I don't know how many months. All right, so personally, my view is that they may actually be announcing a tapering during the September 23rd meeting. Okay, and likely I believe the tapering will start in early next year. Okay, probably like within the first quarter of next year, maybe January, maybe February, maybe March. Okay, so that's my view on when QE tapering will be announced and when it will start to take place. Okay, now as for the amount of QE that's going to be cut back, at the moment is still unclear, but what we have right now, or rather should I say what the market wants to hear, is like what Powell has mentioned, a QE tapering this year. Okay, so that actually led to a strong rise in the stock market. Okay, when Jerome Powell when the speech was actually released. Okay, when the speech was actually released, so there was a strong rally in the S&P 500, in Dow Jones, in Nasdaq. Okay, that actually led to a risk-on mindset, a risk-on sentiment by the market. Okay, that actually causes, if you guys were actually trading or were actually looking at the charts on last Friday, you will see that the US dollar actually weakened, okay, against the other major currencies. Well, that's likely because risk-on sentiment, right? When we get more certainty when the market gets more certainty from Jerome Powell in terms of QE tapering, okay, the market will naturally adopt a risk-on mindset, okay, leading to a decline in demand of safe haven currencies, okay, like the Japanese yen, US dollar, and the Switzerland francs. Okay, so yeah, with that, the next meeting will be held on 23rd of September, and I will update you guys again. Okay, if there's any new updates and things like that. All right. So that's all I have to share with you guys today. All right. With that, I will hand it back to the host.